Hey guys, Doug the Retirement Guy here. Should I have TSLY, YMAX's Tesla optional fund, in my retirement fund for more income? They're advertising 69.51%. Let's find out if we can get the 69%, and let's see if it's going to fit into our parameters. First off, YMAX Tesla Option Income Strategy, better known as TSLY, advertises a 69.51 distribution rate and a 30-day SEC yield of 3.27. Now, this fund does not directly invest into Tesla, but it's selling options and an income strategy that they have built. They've used this in a lot of different markets, and I think you're seeing it. They've done it with Amazon, they've done it with Google, they've done it with Facebook. They have a unique way that they sell options and build income from this. When we look at the strategies that they have, and you'll see this on a lot of YMAX's programs, they invest a ton of money into the U.S. Treasury, in notes and bonds, the Treasury bills. So you can see across the board, they have a wide vast of assets in the billions of dollars in each and every one of the accounts to really generate just basic income. Then they do the Tesla options. So again, why Tesla and why the TLSY? Well, it's because that 69.51% is what gets everybody excited. And when you look at 3.27 in a 30-day SEC yield, you get excited as that as well. Everything I always say on this, when you see the big returns, they're always done over a specific period, and they also include both income, capital gains, and your income's coming from dividends and interest from selling those options. When you see numbers this high, of course, guys, this is always a high, significant risk portfolio. There's a lot of strategies that they have to use. So the volatility on this account is going to be extremely high. So that's always something to watch out for. A 3.27 yield, though, in that 30-day yield from SEC, we have found that to be a very strong and could be a good cash payout coming from this. If they can come up with their dividends and come up with the payouts, it's a nice package, and the SEC shows it as being a possibility very high. They offer a monthly dividend buyout or payout. It's never guaranteed. Always remember that. These are not guaranteed recorded dividends. It's all in the performance of how the options have gone out for that month, plus interest that they've gotten into. This gives you a reinvestment potential with the monthly payouts. You can reinvest into dividends, and that can increase your returns, compounding effect, or you can take the dividends out, use it for regular cash flow to make your monthly payments. I'm a person, I love weeklies. Monthlies is my minimum, especially in retirement accounts, because you want to have that steady cash flow on a regular basis. And of course, this is a cost-effective way to invest in the Tesla train, as that Tesla is a strong market and has done a lot of things over times. This is where you're able to, with a little bit of money, get into it. You're not buying directly into Tesla, but you're getting a lot of the rewards from it. Let's take a look at the return strategy from Tesla as of 12/31 of 2024. 1 month from that point, so basically January, they made 7.24%. 3 month, they're at 30%, or excuse me, 34%. 6 month, 44%. And because we're at pretty much at the end of that year, the year to date and 1 year dial into it, so you're at 29.51%. This fund came into effect November 22nd of 2022, so technically 2 years into this, and you're seeing that they're basically coming back with about a 42% return. A balanced out, once you go through it, the analyzed is down to 18 points. Very, very strong fund. If you're looking at this, nice growth all the way across the board. So what we did was a lot of numbers on the board, but we threw a $10,000 investment into our calculator program. We have 12 months on the board. If this one did, I want to clarify that this stock did split right basically in February of 2024. So we went and said, let's do it for the back 12 months where there's no splits or anything to confuse anybody. And we said if we had on 3/5 bought the stock 17/21, $10,000 invested, we'd have 581 shares. Now here's the big thing. If you look at that dividend, they're fairly consistent. The low is 59 cents. We'll call it rounded to 60 cents. They've paid up to $1.28. But you see a ton of stuff right in that 70 to 80 cent mark month in, month out. So it's a very, very strong dividend paying fund. But when we look at the bottom, the stock return. So if we sit down and say we had $10,000 invested at 12 months later, you would lose $1,731 or 17% of your net value of your investment. Now that's not a good sign. You would have been paid a dividend return of $6,124 or 61%. So again, that's a great sign because you can almost take all your dividends and almost cash your $10,000 cash out and always say play on the bank's money. When you calculate your losses with your gains of the dividends, your total return comes into $4,392 or 43.93%. So the stock value, horrible. The dividend, awesome. The total mix of the two, it's fairly impressive. Now we take a look at this price adjustments over time. The Tesla, I call it the Twin Peaks. This is where the stock bounces up, but it doesn't hold. As you can see in our chart here, it bounced up, dropped back down, bounced up, and we can see now it's coming back down. The average price is $15.25. So the chart easily shows that it's holding the price value over long periods of time, but you can't buy on the peaks. You have to buy at the flat line periods if you want to make this stock work. So let's take a look at the summary report. As we said, the stock return loses 17% over 12 months. That's $1,700 of your $10,000 that you've lost. That's a huge thumbs down. I never have a retirement fund that's going to lose double digits. You almost never want to lose anything of your value to gain anything. The dividend return, 61% or $6,000 over 12 months. Well, I'm going to give that one a big thumbs up. And then your stock return, total return is 43%. That's including your dividends over the last 12 months. We'll give that one a strong thumbs up. Now, when we go to the dividends, you're looking at $878 a month in dividends. That's a decent amount off of $10,000. And you need the dividends to cover the loss of your NAV. You need to use part of your dividends to replace the value that you've lost in the stock. So again, this is very scary. So is Tesla good for our retirement account? Well, my answer is going to throw you here for a minute, and this is the first time ever we've thrown this out, and we're going to call it maybe. And what does this all mean? Well, first off, your NAV, your total value investment that you have, your $10,000, it means your value is going down, okay? Every single month, every single year, you're going to lose value in your account. Your dividend is so great, though, at 61%, that you're going to sit there and say, I can't pass up 61% being in my retirement account. It really means you're getting 43% because you need 20% of your dividends to be paid back to your value to support this fund. So how would I invest in this stock to say maybe? What I would use is a 70-30 split of a dividend, meaning reinvest into the stock each month 30% of the dividend. Okay. When I say a retirement account is you want something in your retirement account, you want either flat or small growth with big dividends. And the problem we have with this fund, the dividends are so huge, but the loss is so big in your value that I can't just walk away and say no on this account because of the dividend so high. So we have to come creatively to do this. And I'll show you here exactly what I mean. If we take that same $10,000 and we use what we call that 70-30 fund, which is 30% of the dividend is used to repurchase more shares. Look what happens on our share side of it. We started off with 581 shares. Then we bought 9 more shares, 590, all the way down to where we ended up buying. We have a total of 707 shares in our fund. When we did that, our fund now balanced out. We made 68.12 cents on the fund, or 0.68%, flattened it out. Now, instead of taking the 67, basically taking the big dividend, which you show because we bought extra stocks to have 67%, we actually are only putting $4,724 or 47% into our pocket that we can spend. Once you get done with that, it really gives you a total return of just shy of $5,000 or 49.44%. This is how I would invest in a retirement fund into this Tesla stock from YieldMax. And what I mean by that is this is very creative and this is more work. So I always put that little asterisk out there. If you want to do more work and constantly keep balancing your fund, this is a great way to be. But this is not a stock that you can set it, forget it, and don't even worry about it. So really a 70-30 split type program works the best. Guys, this is Doug, the retirement guy. If you like what we're doing, man, give us that thumbs up. It helps the channel. We're trying to grow this thing so we can do more with it. Hit the subscribe button so you don't miss a single video. And best of all, if you have any comments, don't be afraid to put them down below. Tell us what you think. Good, bad, ugly. I'll take it both ways. And here again, everything helps to grow the channel. I appreciate it, and we'll see you at the next time.